Hi guys, today is April 21st, 2020. Futures are pointing down as oil is continuing to crash. And yesterday, as you know, oil went negative for May delivery, and everybody was saying that no, that's not the real price because the real price is June delivery. Well, June delivery is going down about 24% right now pre-market. So we'll see what happens, but right now futures are down because of this. And on a separate note, Senator Chuck Schumer said that they're ready for a small business $350 billion or $450 billion package, and with pretty much every issue being agreed upon. So let's jump to S&P 500. S&P 500 is trading lower. About 500 points, as like I said, that oil is crashing down, and I think the S&P 500 will trade lower today, and will trade lower, as I told you yesterday, for a couple of days, and as there are a lot of uncertainties, and companies are coming in with earnings, not so bad earnings, but pretty much everybody is withdrawing their guidance, so a lot of unknowns on the market. So I would be very careful trading stocks or buying stocks right now. Okay, so let's jump to corporate news. Let me just address some of the oil stocks that people are asking me about. So, for example, oil ETFs that mostly popular are, first of all, USO. Okay, United States Oil Fund that's trading around $3 right now, and I would be very careful to buy this because people don't really know what they're buying right now in these oil ETFs, because these ETFs are actually front-loading futures, oil futures. So if oil futures continue to fall, and these ETFs will suffer. So I think USO may go under $2 in my opinion. But we'll see what's going to happen. Another one which with less exposure is oil. Okay, OIL. Okay, so this is this provides less exposure to oil because they're also front loading futures, but they're doing it with buying treasury bills, and basically if you invest money, they're also investing in this fund, they're also investing in treasury bills, and you can earn interest on treasury bills. So this is providing less exposure to than USO, but still very dangerous in my opinion. Another one is DBO. Even less exposure to oil, but still it's going to go down if oil will go down. And another one is BNO. BNO provides you exposure to Brent oil. As you know, the previous ETFs will provide you exposure to WTI, but this one, BNO, will provide you exposure with Brent oil. Okay, so let's move on to corporate news. Southwest Airlines. Southwest Airlines was had two positive revisions today from Susquehanna. Positive note from upgraded from neutral with price target of 41, and Deutsche Bank maintains buy with price target of 45. Okay, so in general, I like LUV before earnings, and I think actually that's the company that may benefit from this oil going down. So we'll see what happens. Other airlines are Delta Airlines that was also maintained at buy at Deutsche Bank, and JetBlue. These two, Susquehanna and Deutsche Bank, went on airlines today. JetBlue was downgraded by Susquehanna, and AAL was also maintained at buy at Deutsche Bank, was price targeted at 11, but downgraded by Susquehanna to neutral, with price target of $10. Okay, so let's move on to other news. International Business Machines, IBM. They reported pretty good earnings, actually beat on by 4 cents, but revenue came in below. They withdraw their full year forecast, and but committed to paying dividend. I mean, the IBM in general is not a bad stock to be in. They pay a pretty good dividend, and actually $114, or maybe a little bit lower, I would be okay to buy IBM in this area. Okay, Beyond Meat. Beyond Meat had some news. They said that their products will be introduced in Starbucks in China this week. So that's good news, because Starbucks is trying to prop up demand for their product, for their stores, and they're introducing Beyond Meat in their locations in China. So Beyond Meat in general, I like it a lot, and I think this could benefit Beyond Meat tremendously. As we open and restaurants open, people will start doing healthy alternatives, and Beyond Meat will be one of the products that people will buy. So I would say Beyond Meat is in probably mid-80s. I would be considering Beyond Meat because it's jumping to $88 pre-market. I would wait for this to come down a little bit at the open if you want to buy this. Coca-Cola. Okay, so Coca-Cola reported pretty good numbers, reported a beat of 7 cents, revenue above, said that all China plants are operating, provided no guidance as the others did, and they said that they will not intend to repurchase shares. Coca-Cola is generally a pretty good stock, and it's a good hideaway stock, pays pretty good dividend, and they go along with the market for the most part. So it's a Buffett stock, not a bad place to hide in my opinion. Okay, CCK. Crown Holdings. Crown Holdings is the company that makes metal beverage and food cans, like metal aerosol containers and stuff like that. So they reported pretty good numbers, beat on EPS, revenues above, provided no guidance, but in general I like Crown Holdings in this environment especially, and this is a defensive stock, pays a pretty good dividend, and CCK is a buy in my opinion. On a sell-off especially. Okay, so Travelers company, they reported pretty good, lower Q1 but higher revenue. So, and dividend raise, they raised the dividend to 85 cents from 82 cents. So Travelers is the insurance company, and I don't know if I want to be in an insurance company in this environment, but in general, like under $100, mid-90s, I think it's not a bad buy in my opinion. Philip Morris. Okay, so Philip Morris reported that they beat by 8 cents, revenue beat as well, but they see lower Q2 numbers as sales at duty-free plummeted. Okay, so basically I don't want to be in Philip Morris in this environment because like I said, duty-free is their main source of income, and you don't want to be in there. Okay, so LH. LabCorp. Okay, so LabCorp receives emergency authorization from FDA for its COVID-19 at-home test. And that's pretty good news for this company, and I think LabCorp is one of the stocks that I'd like to buy in this environment. And I mean, it's pretty much was trading along with the market, but in general, I think it's a pretty good company to be in at this stage. Okay, LMT. Lockheed Martin is another good company. It's a defense contractor, and they're benefiting from government contracts a lot, and it's a pretty safe company to be in general. Pay pretty good dividend, and they reported beat on EPS, beat on revenue, and stick with the full year guidance. So that's a pretty good company to be in this environment, a defensive company. Another one that I would consider is RTN, which is Raytheon. RTX, actually, I'm sorry, RTX, which is Raytheon Technologies, and as you know, Raytheon was merged with United Technologies, and they form a company that's called Raytheon Technology, stock symbol RTX. Pretty good buy in my opinion at these prices because it's very low right now, and I think they could do well in this environment considering a lot of defense contracts that the government is providing. SJM, Smucker. Okay, so Smucker said that they're raising its sales and profit outlook as consumers stack on shelves during this COVID-19 pandemic. So in general, Smuckers is a food producer, and obviously they're doing pretty well. And I think if they drop below 120 on a sell-off, that's a pretty good buy. SJM. Okay, so EFX, as the credit reporting agency, reported higher EPS, the highest revenue ever in the last quarter. So Equifax, and that's a good company to be in right now. And they pay pretty good dividend. And if they drop below a little bit, like low 120s, I think that's a pretty good buy. DKL upgraded. That's DAL Logistics Partners, upgraded by Credit Suisse to neutral with price target of $12. Logistics companies in general are pretty good place to be in right now because oil prices are very low and they spend a lot of money on fuel. So when we reopen, the logistics companies are the first ones that gonna benefit from the reopen. So I would take position in logistic companies like DAL Logistics, for example. Okay, so and another one is SFM. Okay, so Sprouts Farmers Market, it's a supermarket chain that provides healthy food alternatives. Was upgraded to outperform by Oppenheimer, and in general, Sprouts is the place to be in. Pays not a bad dividend. I mean, not very high, but not a bad dividend. But it's a good place to be in this environment, as people are stacking shelves and trying to live healthy, pretty much. So that's it, guys. That's the wrap for the day. Don't forget to subscribe to my channel, click the like button. I'll see you tomorrow.